Hey everyone, quick question for you. When you need to fill fuel in your car or bike, where do you usually go? I mean, which fuel station you usually go? Sure, there are plenty of fuel stations around us, but have you ever wondered which company has the most number of fuel stations in India? IOCL. Indian Oil Corporation Limited. As you would have already guessed, today we are diving into the stock of IOCL, and the company is proudly holding the title of having highest number of fuel stations in India. Welcome to another episode of IOCL Stock Analysis series. Whether you're an aspiring investor or seasoned pro, this series will help you in making your investment decisions. So if you're seeing this video for the first time, let me tell you something. This video is part of our IOCL Stock Analysis series. So if you're watching this video for the first time, please hit the subscribe button so that you don't miss any of our next IOCL videos. So without any delay, let's get started. IOCL is an Indian multinational oil and gas company under the ownership of Government of India and administrative control of Ministry of Petroleum and Natural Gas. It is the largest government-owned oil producer both in terms of capacity and revenues. The company revenue stands at nearly 8 lakh crores and the profit of the company stands nearly at 39,000 crores as of FY24. IOCL is one of India's leading downstream oil and gas companies which is providing innovative energy solutions. And the legacy of this company dates back to 1959. Indian Oil has grown to build a diversified portfolio that spans the entire hydrocarbon value chain. Now you might be wondering, right, what exactly does downstream mean and what exactly is hydrocarbon value chain? So these terms are very crucial whenever we are analyzing companies like IOCL. But why do we need to understand hydrocarbon value chain? So understanding the hydrocarbon value chain allows us to see the entire journey of oil from extraction to refining, distribution and ultimately consumption. It's like understanding the map before you're going on a road trip. So knowing this will help us navigate the entire journey of the operations of IOCL. So we'll also understand why it is very important for the Indian energy landscape. So what exactly is hydrocarbon value chain? The hydrocarbon value chain refers to the series of interconnected activities through which hydrocarbons like crude oil and natural gas are discovered, processed and transformed into useful products that reach customers. Hydrocarbon value chain is broadly classified with three categories: upstream, midstream and downstream. So let's talk about each of them in detail now. First one is upstream. So this is the first stage in the hydrocarbon value chain where hydrocarbons are located and extracted from the earth. In this, exploration is the first step. Geologists and engineers search for the oil and gas using seismic surveys and other advanced techniques, and test drilling is conducted to confirm the presence of hydrocarbons. The next step is production. Hydrocarbons are extracted through wells drilled onshore or offshore. After that, initial processing is also done at the site itself, and which separates the crude oil, natural gas and water. So what does upstream companies do? They usually produce natural gas and crude oil. ONGC is the perfect example of the upstream companies. And the next step is midstream companies. This stage involves moving and temporarily storing hydrocarbons for further processing or distribution. In this, most efficient pipelines are used in order to transport the oil and gas. Ships are used for international transport of this crude oil, which means midstream companies are especially in the transportation process. So example, Petronet and as well as HPCL also comes under this midstream companies. And the third one is downstream companies. In downstream, hydrocarbons are refined and transformed to the valuable products that we use every day. So there are few steps involved in the refining. First step is distillation. In this, crude oil is heated up and components are separated based on their boiling points, like how water and oil separate. The second step is cracking. This step breaks down heavy hydrocarbons into lighter ones such as petrol and diesel that we use in our vehicles. Third step is blending. In this process, there are several components mixed together in order to create a perfect fuel which also meet the quality standard. So then there is petrochemical processing. In this, byproducts from the refining like ethylene and propylene are converted to the other products like fertilizers and also plastics and other chemicals. So a great example for these downstream companies is nothing but IOCL, which is a leading player in the downstream sector in India. So as you can see, IOCL falls under this particular category, taking raw hydrocarbons and converting them to the useful products that we use in our daily life. So as you have understood the entire hydrocarbon value chain, now it is easier for to understand the business overview of the company. So let's start the business overview of the company. IOCL operates in four major verticals. First one is oil, natural gas, petrochemicals, and it's also expanding into the upstream value chain. Let's look at some interesting numbers before we understand the complete business. IOCL's refining capacity stands at an impressive 70.25 MMTPA, making the largest among Indian refining companies. And they're not stopping there. IOCL has plans to increase capacity to 87.9 MMTPA by 2026. In fact, IOCL has achieved its highest capacity utilization rate of nearly 104.5%, and their refineries operated at an incredible 97.3% availability in 2023 to 2024. And when it comes to pipelines, IOCL operates the world's largest oil and gas pipeline network of nearly 19,500 kilometers of crude oil, petroleum product and gas pipelines with an annual throughput capacity of 124.4 million metric tons of oil and 48.73 million standard cubic meters per day of gas, which is a very huge capacity. And IOCL has a robust marketing and distribution network with over 60 61,000 touch points across the country, making it a dominant player in Asia's petrochemical industry. And the second segment which they are operating is natural gas. Natural gas is a segment where IOCL has emerged as a key player. They are currently the second largest player in the natural gas sector. In fact, in 2023 to 2024, IOCL has invested a whopping $71.41 million, producing 1.59 million tons of natural gas, clearly showcasing their commitment to grow in this particular space. And the third segment which they are operating is into petrochemical segment. IOCL has made a major mark in the petrochemical sector with an extensive network and also marketing capabilities. IOCL produces a broad range of petroleum products, and if you look into the FY 23-24 data, they reported sales of nearly 3.1 million metric tons, and they also launched a new brand called Cycloplast for polymer recyclates. IOCL is now positioned as the India's second largest petrochemical producer and is also having the plans to expand the capacity to reach nearly 13.6 MMT by 2030. And now let's also look into the fourth segment, which is exploration and production, which means our upstream segment. And when it comes to exploration production segment, IOCL is actually planning to expand its presence over this particular industry. The rewards in upstream segment are very much higher. Equally, the risks are also higher. Currently, they are actively pursuing operations in 18 domestic and 11 overseas assets, spanning across various gas collecting stations with major production installations in places like Bokaro for coal methane bed gas. IOCL's international reach extends to countries like USA, Canada, Oman, UAE, Venezuela, Libya, Nigeria, and Russia. So before diving into the IOCL operations and before even understanding the strengths of the company, it is very much important for us to understand the industries in which they are operating in, so that we'll understand how will be the future of this particular company. As per OPEC, India's oil demand is expected to rise to 5.59 million barrels per day in 2024, up from 5.37 million barrels per day in 2023, which is a solid growth of 4.1%. India continues to hold its position as the third largest oil consumer in the world, and also the petroleum products have also grown significantly, climbing from 158.4 million metric tons in FY14 to massive 234.3 million metric tons in FY24, which is a consistent annual growth rate of nearly 4% again. And when it comes to refining, India's capacity has expanded from nearly 215.1 MMTPA to 256.8 MMTPA in the last decade. And the interesting point is, countries plan to expand or double the refining capacity to nearly 450 to 500 million tons by 2030. And the more interesting point is, the industry is expected to attract investments worth nearly $25 billion in exploration product sector alone. So as we can see, oil and refining industry is not just growing, it is evolving rapidly. So this creates immense opportunities for the companies like IOCL here. Now let us focus on the strengths of the company. So let's start with the IOCL strengths. First one is the leadership position. As we already know, IOCL is a powerhouse in oil refining and marketing industry. And if you look at the numbers for a second, it operates nearly 11 refineries, contributing 31% of India's refining capacity and capturing 42% of petroleum products in India. Its vast network includes 37,472 retail outlets and 12,880 LPG distributors, ensuring unmatched reach and customer trust. But what keeps IOCL ahead? Its integrated operations, diversified capabilities, and high efficiency. And the second strength of the company is strategic expansion. The company is gearing up for a significant growth of capex, nearly 1.5 lakh crore over next 3 to 4 years. This includes refinery expansions, pipeline infrastructure, new retail outlets, and petroleum plants, ensuring company stays ahead in the growing market. And the third strength of the company is strong government support. IOCL holds significant strategic importance to the government of India, serving as the cornerstone in the implementation of the government's socio-economic policies. The government's 51.5% stake in the company gives it immense edge and as well as the extra advantage compared to the remaining peers. And now, let's also talk about the fourth strength of the company, which is the established network of pipelines. IOCL operates an extensive pipeline network, as we already discussed in the business overview section. And if you look into the numbers of this particular scenario, it is interesting and shocking. It operates nearly 19,700 kilometers, facilitating the transportation of crude oil, petroleum products, and natural gas. And the infrastructure boasts a throughput capacity of nearly 124.4 million metric tons per annum for oil and 48.73 million metric standard cubic meters per day for gas. And now let's also focus on the FY24 numbers. In FY24, IOCL's liquid pipelines achieved an impressive throughput of nearly 95.8 MMT, up from 95.04 MMT in FY23. And gas pipelines also saw a significant growth with a throughput capacity of nearly 3,717 MMSCM in FY24 compared to 3,077 MMSCM in FY23. So these cross-country pipelines represents the cost-effective and as well as the energy-efficient solution for transporting crude oil and petroleum products, underscoring IOCL's commitment to operational excellence and sustainable logistics. And the fifth strength of the company is a strong focus on R&D. IOCL has a total of nearly 1,636 effective patents as of FY24, and they have applied for nearly 1,736 patents as of the recent financial data. And the most important point, IOCL in partnership with Tata Motors have launched the India's first hydrogen bus in recent years, and they set up new R&D companies campus for research in renewable technology. So these are the few strengths of the company, and now we need to focus on the other side of the coin, which is the risks of the company. The first risk of the company is exchange rate volatility. IOCL imports 80 to 85% of its crude oil, making it highly sensitive to rupee-dollar exchange rate. For example, crude oil prices have fluctuated $20 per barrel in 2020 to nearly $100 in 2022, with an average procurement price of nearly $84 per barrel. So what happens when these kind of changes happen? It will impact the overall business of the company. Such volatility can affect the inventory valuations because IOCL holds 70 to 80 days of stock. While this company counters this with marketing margins, maintaining this strategy is crucial for the growth of the company. And the second risk of the company is crack spread volatility. But what is crack spread? Let me explain. The difference between crude oil prices and the refined product prices directly impacts the refining profitability. A rise in the crude price or drop in the refined product will squeeze the margins of the company, which will impact the financials of the company. So crack spread is an important parameter which will impact the overall financials of the company. So these are the two major risks of the company, and they're tied with the global tensions. So apart from these, any geopolitical tensions or any unexpected events happening will impact the business. Now, as you understand the risk, strengths, and also the industry overview and the business completely, now it is time for us to focus on the numbers, which means financials of the company. So without any delay, let's get into the financials of the company. Now I'll display the chart here. As you can see, the first sales data. IOCL sales demonstrated strong growth, peaking at nearly 8 lakh crores in FY23 with a slight decline to 7,76,000 crores in FY24, while expenses also followed a similar trend. Operating profit margins record from a low of nearly 3% in FY20 to 10% in FY24, showcasing improved operational efficiency. And if you look at the net profit, which turned negative in FY20 to nearly minus 1876 crores, rebounded sharply to nearly 43,000 crores in FY24, supported by favorable margins cost management. Earnings per share also mirrored this recovery, rising from minus 0.63 to nearly 29.55 in FY24. So this highlights the company's resilience and ability to tackle the challenges like pandemic and other unexpected events. Now let's also focus on the shareholding pattern of the company. So it reflects the interest and confidence of the investors in this particular company. IOCL's shareholding pattern shows stable promoter control at nearly 51.50%, while FIS interest has increased to 8.49% in FY24 from 7.19% in FY20. DIS, however, reduced their stake to 10.23% in FY24 from 13.72% in FY19, and the government stake rose significantly to 19.57% in FY24, indicating strategic changes, while the public shareholding decreased from 29% in FY21 to nearly 10.18% in FY24. This is likely due to buybacks and other strategies. Overall, the pattern indicates the changing dynamics and increasing confidence in the company. So let's focus on the growth triggers of the company. First growth trigger is expanding EV infrastructure. As the country is focusing towards EV segment, the company is also expanding its operations to this particular segment. IOCL is leading India's transition towards green transportation by investing heavily in the electric vehicle infrastructure. As of June 2024, 10,020 EV charging stations have been commissioned, accounting for 59.7% of the country's total EV charging network, and the battery swapping services are available at nearly 99 fuel stations, offering convenience and flexibility for EV users. And the second growth trigger is policy support. Indian government is supporting oil and gas sector with various policies. Let's look at all those initiatives. Nearly 1 lakh crore worth of projects in Northeast India targeted for completion by 2025, and a planned investment of nearly 7.5 lakh crore in oil and gas infrastructure over the 5 years, as announced by PM Narendra Modi. In FY24 to 25 budget, government has allocated nearly 497 crores for the pipeline infrastructure for injecting compressed biogas into city gas distribution network. And fourth one is the target to establish nearly 100 million coal gasification and liquefaction capacities by 2030, reducing imports of natural gas, methanol, and ammonia. So with these strategic moves, it is going to benefit the IOCL in the future. So that's all about the growth triggers of the company. And now let's focus on the ESG. But what does ESG mean? ESG stands for environmental social governance. Let's start with environmental section. First one is focus on the green initiatives. Indian Oil is pioneering the green energy transition with initiatives aimed at achieving operational net zero by 2046. Indian Oil is also driving the national transition towards carbon neutrality with initiatives in hydrogen mobility towards a green future, EV charging facility at Indian Oil Pump in New Delhi, and also Madhya Pradesh hydrogen transportation, biofuels, electric mobility, and minimizing water footprint. And they also launched a brand called Cycloplast, which integrates recycled petroleum chemicals with virgin plastics, promoting responsible disposal and reuse. And also the establishment of Terra Clean Limited will consolidate green initiatives, optimizing resource allocation and enhancing innovation. And the second section of the ESG is nothing but the social. So during 2023 to 2024 financial year, company allocated a substantial portion of CSR fund, which is of worth 290 crores to the thematic areas of health and nutrition. And also they have allocated 47 crores for the 40 aspirational districts during the year assigned by the DPAs. Throughout the year, the company undertook nearly 600 community development programs, and this is how the company is contributing to the society. And the third and last section of the ESG is nothing but governance. Now we need to talk about a scam in which IOCL is directly involved in that particular case, which is called as HSD scam, which stands for high speed diesel scam. The HSD scam or high speed diesel scam, which involved illegal practices and fraudulent activities related to the distribution and sale of high speed diesel. This scam came to light in the early 2000s, where oil marketing companies and private traders were allegedly involved in diverting subsidized or non-taxed diesel to the black market or for non-legitimate users. Indian Oil was directly linked with the HSD scam due to its involvement in distribution and marketing of high speed diesel, but the company itself is not the central actor in this particular scam. The Central Bureau of Investigation was got to investigate this scam, and IOCL was initially under scrutiny due to its involvement in the fuel distribution system. However, after several interrogations, the CBI found that IOCL was not directly responsible for the diversion or discharge the company from any wrongdoing. So that's all about the governance section, and now let's come to the conclusion. The IOCL's financial performance is closely tied with the global tensions and also the changing crude oil prices and macroeconomic factors. While the company may experience high sales, but the actual point is lied with the margins which they are getting. So if the margins of the company decline, it will impact the overall financial performance of the company. Therefore, investors must keep a close eye on the global scenarios and also global tensions which will impact the financial performance or the business of the company. Due diligence is essential whenever you are investing in this particular company because the company is exposed to several global tensions and geopolitical scenarios. Any change in the crude oil prices or any change in the external conditions will impact the business of the company. So keeping up to date with these kind of parameters will help you make your better investment decisions, especially with this particular company. So before investing in this particular company, do your own research. So that's all for today. If you like this video, please hit that like button, and if you are watching this series for the first time, do subscribe. And thank you for watching the video. We'll see you in the next video. Thank you.